Well, good weekend, all. Ira Epstein with your Weekend Spider ETF stock market wrap-up for this November 30th, 2025. Come Monday, we're going to get the S&P final U.S. manufacturing PMI. The ISM manufacturing data comes out. And I guess in the evening at some point, Fed Chair Powell speaks. I don't know if that's normal or not, when you're just days away from the Fed meeting. So we'll find out what that all means. One thing we all know in looking at the markets is we've had a heck of a wild November. From basically a crash status to a coming back status. I mean, it's all pretty darn powerful as I look at it. Very, very wild. Friday was certainly a strong day. AMD, I don't know why that's not coming in, but everything else came on the positive side of the markets, as you could see, and that's pretty impressive. Now, as we look at Google, these are new highs for the move. So people thought, and I remember this when AI came out, oh, there's not going to be the Chrome, you're not going to need this, you're not going to need that. Well, Alphabet has proven the exact opposite. They're doing well, and you could see from advertising on this is moving out to the upside. You've got a pattern of higher highs, higher lows. The market's still running away here. You see that with the swing line. You're over the 18-week moving average, the 100-week, the 200-week. The trends are up. All the moving averages are lined up for this market to be in very, very good shape. It would take a heck of a break in December in order to take the bullishness out of this chart. But it is getting ahead of itself. If you consider, like I do, that once you get over a Bollinger Band, you can ride the band, but staying over it very long, that doesn't happen too often. The good news for the market is that on pullbacks, because you have an embedded slow stochastic reading, I expect to see strong buying on the breaks. Meta's not quite in the same shape as Google. Meta actually came down and made a new low that we haven't seen in a very long time. If you think about it, from the high that it made just recently back in August 15th of 796, this market came down to 581. So that's one heck of a break that the market has experienced. And now the question is, can it get its mojo back? Where did it stop? The first challenge of the 100-day average of closes. You see the green line right through there. In Ensign Group, which again, I'm going back and looking at healthcare, and we're all going to need that over time. Higher lows, higher highs, but overbought and approaching the upper Bollinger Band. I went back and looked at Cleveland Cliffs too. And in looking at this market in the steel industry, we are looking at a market that's challenging again its 100-day average up to its upper Bollinger Band. So it had a correction. It stayed for 3 weeks under the 18-week average, couldn't make it to the lower Bollinger Band, and has come back. I like Rocket Mortgage. I've been talking to you about it. And now that we're saying that before Christmas, we're going to have a new Fed chair. I don't know if Kevin Hassett will stay in the lead for it or not, but if he does, he's very much the president's man, and this could help Rocket on its way back up. It's in an uptrend now. My guess is the pros are going to buy it at 1813 with tight stops, probably under 1607, looking to see what it can do. Unfortunately for Home Depot, unlike Lowe's, it just doesn't seem to have things going for it just yet. It came down for 2 weeks. It's played at the lower Bollinger Band, but it is trying to hold on and give you a bounce. But there's nothing bullish on that chart. And I have to say the same thing is true of Uber. Take the names off this in Home Depot. They look the same. 2 weeks at the lower bands. They came off recent new highs, and the markets have gone nowhere. Rivian has come alive. The market is looking like a base is trying to form here, and I'll say that all through this sideways action. They're very focused on what they do. Not a lot of models on different cars, but of course to get the Amazon business and other parts going forward. And they're trying to be what I'll call that mid-range, which I like in the pricing of it. But it's over the upper Bollinger Band. I think it's just, worth holding on for the longer pull with a minor position. That's what I've told my subscribers at least. In XLI, and by the way, before I go any further, when I said subscribers, this is Crypto Week, which means if you stay on this at the very end, you will see that I'm offering 1/3 off all subscriptions to all my services and my charting courses. I'll show you that in a minute and how you go get that. So when we look at XLI, we came back over the 18-day average. So you've got the bias up. Momentum had been coming down. It's trying to neutralize itself. I don't think you're going anywhere just yet. In the energy sector, Spider, we found support at a combination of the green line, the 100-week average, and the 18-week average. Momentum here is not overbought. You're in these, 60s at this point? Let's get right over here. Yeah, so you could still climb a little bit here, but I do think you're going to find 92.53, the upper Bollinger Band, going to be resistance. The dollar. Will the dollar be able to hang on going into year end? Here's what you've got to ask yourself in the dollar. In the dollar, you're not embedded here. Week 1 of embedding, week 2, week 3. What I don't like is the market closed near the lows of the week. That means when it reopens tonight for the futures, if the momentum's going to try to wane itself unless you get a big rally, and I don't see why you would at this point. So be careful tomorrow. You want to take a good hard look at that. In the gold market, the trend is up, but it's overbought. The question is, can the market move in an overbought condition? I would not tell people to deploy new money at it, but I like the old position of holding on to it. And I have you in that if you're one of our subscribers. In copper, all right, and looking at the COPEX right now, what do you do here? You've got the higher high, the lower low. You've got short supplies coming into 2026. I think you have an overall bullish bias towards the market, and you see what that's going to do for you. So in looking at Cyber Week, let's assume you wanted to try what we do for a month and see what we do there. And I think you should give it a try. It's 1/3 off. Instead of $32.50 a month, $22 for futures. For the Spider ETF video, $24 instead of $35. You can get 3 months, by the way, of your choices here. And we're offering on my core courses, take a look here, 1/3 off. The enhanced Bollinger Band course, you hear me talk about this all the time, 1/3 off in the outside day course. If you're interested in seeing my complete futures, where I write 2 updates a day, and that also includes the morning subscriber video, well, if you have a funded trading account with us, it's $120. Don't have one, it's $400. Have an account with us is what I'm saying. In the meantime, to get to this, move your cursor up to the top here, or if you're watching us on YouTube, go over here. It's IraEpstein.com. Couldn't be simpler than that. If you have questions, you see the number on your screen. Thanks for watching. I'm Ira Epstein.